The bulls fight back with a rally. Can they keep it going? This is Invest with Jacob. Okay guys, so in yesterday's video we were looking for the bulls to hold support and then rally higher, and that's exactly what we saw, as the bulls did hold support in the morning and rallied into the afternoon, but they did not do so in what we would call an impulsive manner. Now we have to see what kind of structure we get. I'll get into that in just 1 second, but first, if you're new here, welcome to the show guys. My name is Jacob Gabbard and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, before we jump into the chart, we had another great trading day yesterday. You don't have to take my word for it. You never should. You should always talk to the people in the room, and you can see all of their comments on the screen about how good the day was. If you want to be part of this winning team, stay tuned for later in the video. For now, let's jump into the chart and take a look. Okay, guys, so here we are on the 1 hour futures chart for the S&P 500, and we saw the move yesterday at the close, or I should say Wednesday at the close, and they moved it up, tried to take out this high, were unable to and rejected. We looked for them to hold a support and then rally higher again. We did have a 1-2 setup, but it failed to follow through completely. And the reason for that is, once you get your 1-2 setup, your next step is you're looking for them to hit at least the 1.0, which they did. From there, once they hit the 1.0, that activates the pivot, and the pivot is the 764 to 618 extension of waves 1 and 2. And then what they really should do is push up to the 1, 2, 3, 6, but they did hit the minimum of the 1.0, and then the next pullback needs to hold that 618 extension. It did not do that, as they spiked down almost to the 382 before trying to rally again into the close. So what that means is this looks a lot more like a corrective ABC type structure. And so when you have an ABC structure like that, you're going to look for another low. Now that doesn't mean that that low is going to be A, B, C, and directly down. It can be, but it doesn't mean it will. We can also have a couple different options. So let's talk about what the few options are and why we would look at them. So the first option would be that we've completed wave 3 of wave 3 to the downside in a bigger move down that would be in that bearish C wave that we've been talking about since last October. If that is the case, this would simply be the A wave of the move up. Then we'd look for a B wave down to almost this low in that area. Then we'd look for a C wave back up toward the 4380 area, which would test the bear pivot. And then we'd look for wave 5 of 3, all right, and that should go down toward the 4120 area, 4138 area, up to the 4205 area. So that would be our next two targets to the downside should that path play out. Again, that would be a B wave pullback down toward this B wave low, and then a move up in a C wave toward the 4380 area, and we do have plenty of resistance in that area. You have this high here that rejected, this high here that rejected, this low that bounced and then rejected, so plenty of resistance. Makes a lot of sense to come back up to that area. And should we see that, we'd look for that wave 5 down of 3, wave 5 of 3 into that 4205 to 4138 area. Could be in between, since they didn't hit the 1, 2, 3, 6 exactly. We should look for a little bit in between the fibs when that happens. From there, we'd look for one more bounce up and then a low down towards that 4,000 area to complete the bigger wave 1 of C in the bearish count. Again, we are at a major inflection point in the market. The bulls need to fight here, and the bears are looking to break it down. So there are two very big levels to watch. The 4246 level is a very big one for the bulls to hold. Below that gets into the pivot for the bulls, or gets below the pivot for the bulls, and when you break below the pivot, it's very unlikely you follow through to the upside. So we would look for continuation from the bears. And up at the top, 4421 is the top of the bearish pivot. That's a key level for the bulls to break that tells us that the bears are not going to follow through to the downside. So a big inflection point here. We're kind of in a wait and see mode, but the bullish count would be that this was wave 3 completing, and this bounce would be a wave 4. Then you'd look for a direct move down on wave 5 that holds that 4263 area, 4246 area, excuse me, and then a bounce from there that's impulsive and goes back up and takes out that 4421 bear pivot to the upside. So again, just to recap that so we're all on the same page, if we see a bounce here, or a pullback here, and then a bounce up towards 43.80, and then a breakdown, that is a much more bearish pattern. In the big picture, as we would look much lower. If we see a more direct move down where this was the high and they're going to come down like this, that is a potentially more bullish move, even though it's directly down, to create a new low for the bulls to build off of. However, if this move down breaks through 42.46, it will ultimately break the pivot, and that is a very bad sign for the bulls. So 42.46 must hold for the bulls. If we see a bounce up from where we're at, a pullback and a bounce up, that is a little bit more bearish overall. Over on the NASDAQ, now if you are bullish, the NASDAQ is for you. The NASDAQ has done a much better job of holding its levels. And so what we have on the NASDAQ off of the low is you have a wave, a 5-wave move up potentially. You have a wave 2 down. They came up, hit the 1.236 like they're supposed to, came and pulled back and tested the pivot like they're supposed to, and then bounced up out of the pivot. So what we look for on the NASDAQ is continuation to the upside. Should that happen, we would look for 1, 2, 3, 4, 5 up towards this 1618 area. 15,043 would be the next area to look for on the NASDAQ. Then we look for a pullback towards the 14,900 area, and then one more push up towards 15,133 to give us a 5-wave structure to the upside, which would tell us that we have a potential bottom in place, and then the next pullback would tell the story. As long as they pull back in a corrective manner and hold and break up, then it would be very bullish on the NASDAQ. For the bears, same situation. If they fail here and break down, we would look at this as an A, B, C. And if they break down directly, okay, we'd be looking for the 1.0 extension. They still haven't hit that on the NASDAQ. It's right here at 14,409. So we'd look for them to come down, hit that 1.0, and then go up. The issue I have with this particular path is it would break the pivot for the bulls on the ES. So I don't see that as a probable path without it being a little more bearish. Over on the upside of this, there is the potential that this ABC is done and they make a poke lower to allow a 5th wave down here, and then the bulls to make a low on the ES to build off of that does hold the pivot. But I do think if they break this low, we could be in for a move down toward this 14.4 area, which again would be not a good sign on the ES. So I'm not in favor of this path in a bullish sense. The other option to the upside would be that this was an ABC like we saw on the ES, and you got a B wave, and then you get a C wave up to create a bigger wave, 4 of 3, and then you get 5 of 3 down toward that 1.0 or a little bit deeper. That would break the 14,128 level for the bulls, which is what the bears need to break the bullish pivot on the NASDAQ. So 14,128 is the key level on NASDAQ for the bears to break, and 42.43 on the ES is the key level for the bears to break. So that's kind of what we're looking at. The NQ does look more bullish because it has held so far. Hit the 1,236, held the pivot, and moved up like it's supposed to. And until they break down below this pivot here at 14,807, until they break down below that level, this bullish path is still playing out. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It'll take you right over to the website. Once you're there, check out our membership plans area. We have 2 incredible monthly plans that both come with a 7-day free trial, because I want you to get in there, make sure you love it, become part of the trading team before you ever spend a penny, and you can cancel at any time. We also have our Elliott Wave for Beginners course. This is helping real traders make real money and finally understand the stock market in a way that makes sense, instead of trying to decipher news cycles where good news makes the market go down and bad news makes the market go up. It's confusing and it's hard to follow, but Elliott Wave makes sense of it all. It gives you clear, clean levels to watch for, and when they break, you know that the pattern has failed. It is 25 videos where I go through 3 different sections: the introduction, going over expectations, mindset, Elliott Wave, and why it works, the chart setup and tools, everything you need to know, and all the tools you need for your chart for Elliott Wave to work. And then the Elliott Wave for Beginners course, where we go through every single wave, its targets, its failure points, why they work, what you're looking for, as well as the theory of alternation, the corrective zigzag, impulsive motive waves, the pivot, corrective depth theory, everything you need to have an arsenal of tools to understand the market. The cool part is it is included in both of our monthly rooms. So if you don't want to buy the course, you can simply become a monthly member. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, as well as a live video where I go over exactly where we are in the counts and what to expect, and the training material you just saw. We trade the SPY and the QQQ, and we swing trade, which means we trade less often than a day trading room does. However, if you are interested in day trading, as well as individual stocks, you could check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, day trading, and PT's reduced risk binary method that absolutely crushes the market. He gets you in at a cheap price and gets you big multiples on your money, and it's how he structures the trade that's so unique. Something you really have to see to understand, and that's another reason we give you that 7-day free trial. He also started a challenge account where he put $4,000 into an account, averaging 3 to 4% gains per week on mini ES futures, showing how to build a small account into a large retirement or savings account. Guys, we would love to have you in these rooms so we can all make money together. All right, the key takeaways for today. We're kind of at an inflection point. The bulls kind of want to take this down and make a new low to build off on the ES, and then have an impulsive structure to the upside. The bears want to kind of push this higher in a bigger move where we'd have a wave 4 of 3, then a 5 of 3 down, and then a bigger wave 4 and 5 that would take us down to the 4,000 level. Over on the NASDAQ, they have a bullish setup if they can follow through. They must hold over 14,807 and get up to 15,133 in 5 waves. That would keep this bullish structure going before we see a pullback. Otherwise, a breakdown below this pivot makes this an ABC, and we would look for lower lows to come in the future. Guys, it's the weekend. Grab yourself a drink, get out of the house, get off the computer, have some fun with your family, and I will talk to you next week.